Alright, man, what's good? Alright, guys, welcome to episode 2 of the Briefing Room podcast, guys. And my name is Veerabhotla.
My name is Sriram.
And today we're going to talk about buy now, pay later plans, guys. So, buy now, pay later plans have been blowing up recently.
Yeah, man, I saw a guy on the internet. He split a burrito of $12. $12, bro. Like, I get it. Okay, $12 is pretty expensive, but like $12 into 4 payments of $3.
$3.14 actually.
Exactly.
Buy now, pay later plans. We got tons of buy now, pay later plans right now, like Klarna, Afterpay, right? Yeah, I saw that reel too, bro.
It's crazy.
And yeah, it's crazy.
Like, how do these companies even make money though? Like, if they're like charging now,
and by the way, there's no interest, so like, yeah.
There's no interest?
Yeah, there's no interest.
So, what? How does that even work?
So actually, bro, to be honest, most of them aren't making money. Most of them are actually losing money. But like the way they make their money, well, they're not getting consistent profit because there's lots of competition, right? Like there's multiple companies like Affirm, Klarna, and Afterpay, which makes competitions hard. And most of these companies tie up with big retail giants, right? So example, Afterpay is exclusively with Uniqlo. Klarna is exclusively with DoorDash, right? And so they tie up with retail chains, right? But when they are making money, so they make money in 2 ways, right? One is late fees, right? So like, let's say you don't pay your payment on time, right? That's how they get like more than 64% of their money, right? So let's say you finance your freaking burrito or something like that, right? And there's a specific date you have to pay like one payment, right? If you miss, they charge you like a huge fee, right? So that's how they make their money from. And the other one is merchants, right? So like, let's say you run a store, right? Let's say you're the owner of some store, right? And so since you took my service, I charge you for that, right? So literally I take like 3 or 5% cut from you.
Yeah.
And yeah, and that's literally how they make their money. But like half of these people financially, like they don't have a good credit rating, right? A credit rating is like a credit score where banks give you like a score out of the debt you can pay.
This reminds me of payday loan companies, right?
Yeah.
They charge insane amounts. Like,
Yeah.
you know, this is basically like the market of credit cards and stuff. Like, I feel like what they do is just like, they take your money, they want you to pay initial low amount first, and then they want you to progressively, like, pay less over time, right? And then
So so when I was researching this, right? So there was this one thing, right? So it like.
But like, this is what's the big difference between these and banks, though?
So okay, let me explain you, right? So like half of these customers, they're targeted towards people who have a bad credit score, people who do not have financial literacy, people who don't understand how credit cards and debit cards work, and people who really can't go to a big bank and get a loan, right? So since it's targeted to them psychologically, right? It's okay. These companies are okay if you use it smartly, right? For example, your groceries, you set a date, you paid on time, no interest, boom, easy, right? But half of these are targeted towards those people, right? They don't understand how this works. So in their mind, right, when they're buying, they're thinking, okay, so like, since let's say something is $400, right? For example, a Labubu, right? Since it's blowing up, right? So they're thinking, okay, so this is only $100 now, and I can pay $100 later, right? Psychologically, they're thinking that way, right? And so it's like it's literally not fair because these people don't understand how finance works, right?
Making money off.
It's setting them in a trap, right? And these guys are making money off these financially illiterate people, right? It's smart if you use it for groceries or something, but and you ask what's the difference between banks and credit card and BNPL companies, right? Okay, banks are way more complex. They have diversified income streams, right? Like you said, you want to go into banking, right? So let's take RBC for example, right? They make their money off credit cards because credit cards have an annual fee, right?
That's a good topic, actually.
Yeah, annual fee, and they make their money off interest. You know how you get interest from credit cards? Interest from credit cards, interest from mortgages. People have mortgages for their homes, right? And various stuff like RBC owns a bunch of investments. People open brokerage accounts to invest in stocks with RBC. They get those fees, and so with all these money, what they do is they don't just keep it. They take that money, right, and they have a bunch of smart people. Hopefully, you end up there, who invest that money in various places, right? And then from those investments, they make
called
more money.
investment banks.
Yeah, investment. So that's why these banks are way bigger, right? They're way more complex, right?
Exactly. Like they, you know, like anytime if you invest $1,000 into the bank, into your savings account with a bank,
the bank is making
the only
1,000 more from
exactly,
you, man.
Like they take your, they're only required to have $100 at any given time.
Yeah.
So the other 900, they can like invest whatever they want. That's how they make money.
That's literally how finance
that's how they give out
works.
loans.
That's literally how the economy works, man.
That's how they give out loans. Exactly. That's the core how this whole like world works.
Banking
They give out
system
loans.
works, yeah.
That's the banking system in Canada. I'm not sure about the world, but like, in Canada, that's how it works. Central banking system.
Yeah.
That's like. Let's talk about credit cards. You know.
Hold on, wait, give me. And here's the big thing, right? These banks are regulated by the government, right? The government the government of Canada. I know in America it's privatized, right? But the government of Canada can easily interfere in these banking systems, and they can manipulate them to lower the interest rates, which means more housing prices, which means more fluctuation in the economy, right? But these BNPL companies, they're not that regulated. You know what I mean, man? And that's the thing.
Exactly. Like they're designed to like make people pay more, right?
Yeah.
Like when you're already targeting someone who's illiterate in financial,
they don't understand how this works.
They're not like responsible with their bills and anything. When they're targeted, right? It's easy money because in their terms and policies, like it can go up to like 300% on your initial like loan that you took.
Yeah,
it can go like crazy amount of money that they can make off you if you don't pay your money on time. Like that's how they mostly make their coin, like pay today or like.
I mean, they're not even making any money to be honest, but that's how they make their money.
Yeah, that's how they mostly make their money. Exactly. Like. It's similar, like, if for people, first-time people trying to understand this, I would say it's, like, similar to credit cards, honestly.
No.
But it's, like, a more, like, demonic side to it.
So, no, like, they send you ads, right? Like, you know, obviously with this Google, everything, right?
Yeah.
The algorithm, it sends you targeted ads, right? So, let's say you've been looking at this item for a really long time, right? Maybe a pair of jeans or sweatpants, right? So, if you've been looking at it for a long time, what they do is the algorithm sends you an ad of these companies, and these companies are like pay $12 now, right, and then pay that extra money later in 4 different payments, right? So it looks like, oh, it's only $12, but then what if you forget the date you're supposed to pay? Because you're obviously gonna forget it. Like, if you're falling for these traps, you're definitely gonna forget it, right?
I wouldn't call it a trap, right?
It's
like
not a trap. If you're responsible, it's good.
You can
it's
actually
really
use your
good.
advantage.
Yeah.
I mean, tying this into credit cards and stuff like that. I mean, like. There's 3 types of people that take out credit cards, right? The people that the bank makes money off of, the people that they don't make money off of, and people that actually lose money off of, right? Like, if you can take full advantage of it and actually leverage it for yourself, you can actually, you know, use it for your own benefit.
No, but you know how you were asking what the difference between credit cards and BNPL is?
Exactly.
In my opinion, I feel like if you're a responsible person, credit cards are way better for you, right? Because the thing is, credit cards, like...
But the main point is, people who can't get credit cards come to these companies.
Come to these stuff, but then, like, let's say you turn 18, you get your credit card, right? When you turn 18, guys, be responsible with your credit card, and make sure your credit rating doesn't affect, right? So the thing is, most credit card holders, they have a strong credit rating. Credit rating is like a credit score, so if you have a bad credit history, the bank won't give you money, right?
It's good to build your credit score from, like, a young age.
It's good to build it, right? So the thing is, credit cards have a credit history, but for these, anyone can do it. Anyone can go to BNPL, right? And the thing is, credit cards have rewards. BNPL doesn't have rewards, right? Yeah. Literally, the Amex Gold card, Amex Gold Platinum card, free points, man. You can literally travel business card for free, right? And these guys have tie-ups with different retail, airline, hotel chains, like credit card companies, right? And if you pay your credit card bill in time, you won't get charged like 0 interest, right?
It's important to understand that everything that comes your way, everything that's sugar coated to look good, everything that like feels like, oh, this is so good, right?
It's actually not.
There's probably like always a catch. If it's too good to be real, there's probably a catch.
Like example, 4 phone companies say, okay, you get a free upgrade, you get a free iPhone if you take the plan. But what they're really doing is they're setting you up in a 2-4 year contract where you're literally just forced to pay that. You'd be better off buying a brand new phone if you compared to the rate of depreciation.
Like,
you know what I mean?
Yeah, you have to be really responsible. Like, our final take on this would be you have to be really responsible with these buy now pay later options, and they're really good if you can use them to your advantage and leverage off.
No,
of
but
them.
why would you use it if you have a strong credit rating? To be honest,
Because
like you're better off with the points.
Because
of credit
sometimes,
cards, man.
because sometimes people might not be in the best financial.
Oh yeah, no, that's true.
Because
That's true.
You don't matter how good you are in investing or like nobody knows how the stock market's gonna go. Nobody knows what the prices are gonna be.
Yeah.
The real estate market. Nobody knows, right?
Yeah,
You might just have like a bad year. You might lose some money. Like
Yeah.
it's okay. Like there's like a stereotype. If you can't pay now, you're kind of broke.
Yeah.
If you need to pay in sections, you're broke.
Yeah.
It's just how society proceeds, but it doesn't matter. You gotta do you.
Yeah, man, exactly. But yeah, so basically, the end of the story is it's designed for people with a bad credit history and a low credit rate. It sets them in a trap, but if you're smart, you won't get set in a trap, man.
Yeah.
Yeah.
All right, that's a great topic. I actually didn't know about these.
Yeah.
I always knew about.
They've been blowing up.
Stuff,
Yeah.
That's crazy. A guy like paying for a burrito in 4 different installments.
$12 burrito, guys. There's a problem if you
crazy.
can't afford a $12 burrito.
I mean, I don't know what that man's going through, to be honest, but like that's crazy though. Hopefully, you didn't lose money.
Yeah, hopefully, man.
All
right, guys. We're gonna wrap up today's episode, and I'll see you guys in the next episode about day trading versus stocks. Peace out, guys. Whew. So episode, this